Last week, it looked like markets had bullied the US Federal Reserve into delaying interest rate increases. But over the weekend, one of the central bank's most senior and respected policymakers fought back. Stanley Fischer, the Fed vice chair and the only board member aside from Janet Yellen who's actually run a central bank before, did not overtly insist that a September rate hike is still on the table, but his message was clear. Weak wage growth went unmentioned, and China warranted only a cursory sentence in Mr. Fischer's keenly anticipated speech at Jackson Hole, the annual central banker jamboree. In contrast, the garlanded economist said he expected inflation to head higher as temporary headwinds dissipated and the labour market tightened. And he stressed that rates should be lifted well before inflation returns to the 2% target. His words helped push the probability of a rate increase next month, as measured by interest rate futures, up from a low of just 22% last week to 36% on Monday. Admittedly, Mr. Fischer only kept the possibility alive, and other policymakers take a less sanguine view of the recent bout of turmoil. Last week, New York Fed head Bill Dudley said he felt that the turbulence had made the case for near-term rate increases less compelling, and a wide variety of economists and bond market veterans agree, with some even predicting no action until 2016. Fed funds futures are still well below their August peak, when they priced in almost a 50% chance of liftoff in September. And the US Treasury market rallied on Monday, despite the Fed vice chairman's relatively hawkish tone. However, if markets continue to simmer down and economic data continues to be robust, then it remains eminently likely that the Fed lifts interest rates next month. The jobs data, due out on Friday, will be even more crucial than normal. Indeed, Mr. Fischer made a point out of highlighting the upcoming report, elevating its importance even further. Deutsche Bank points out that the August reading often tends to miss, only to be revised upwards later. The current median economist estimate is for 216,000 new jobs. If it proves that strong, then a September liftoff will look much more likely.